by 2030, Bitcoin is going to reach $1 million per coin. And I think that's actually pretty feasible if you think about it. All of the things that need to go into getting Bitcoin there, we'll talk about here in a little bit. But if you just look at where it's come in the last 10 years, we're talking that, just a couple of years ago it was worth $5,000. And now we're up, I think we're hovering around 40. Hello and welcome to the Neighborhood Money Podcast, a video podcast here to talk about personal finance and helping you build a life you deserve. If you're new here to the neighborhood, my name is Cavan and my co-host on the other side of the screen is Drew. And today, Drew, is all about Bitcoin. So Bitcoin's getting a lot more noise in the press. People most likely are familiar with it, maybe not invested into it yet, but they probably have heard of it before. And, we're coming right off of the 2022 Bitcoin conference last year. You and I are both super excited. We paid very close attention last week through all of the different presentations and, fireside chats and all of that stuff. But super excited to dive into Bitcoin today because I think it's a really important invention, I suppose you could say, of the 21st century. And I think this episode is going to provide a lot of value for both people that are brand new to Bitcoin, as well as people that have been buying Bitcoin and just want to know the latest and greatest of what's going on in the Bitcoin scene.
Yeah, I don't know how many people were at this Bitcoin conference last year, if there wasn't the couple years before. I feel so early on in my journey with crypto and Bitcoin and so on. But actually following it a bit this year, it's really opened my eyes to the possibility of the blockchain and Bitcoin specifically. And really at this cryptocurrency or this Bitcoin conference in Miami, the mayor was all about it, wants to be the Bitcoin capital of the US pretty much. And some big names were at this. You see like Kevin O'Leary from Shark Tank, but he obviously he's known for other things, but that's probably the easiest one for most people to see. But they had even UFC people there of like that Ben Askren, and they had Serena Williams there. There was actually a Brock Pierce, and I don't know if anybody knows this, but he is a Minneapolis guy, and he was in the Mighty Ducks movie. And he became like this tech entrepreneur, venture capitalist type of person. So there's all walks of life at these Bitcoin conferences, some really big names, some smaller names, and really eye-opening. And especially looking at sponsors, you see companies as reputable as Ernst & Young or SoFi or MasterCard that are sponsoring an event like this. So it's can't be overlooked, in my opinion.
Yeah, I mean, just those names alone are massive, right? The fact that you have Ernst and Young EY, for example, sponsoring this conference, that really means something. That means, there's a lot of momentum. And we're going to get into that in this episode, but there's a lot of momentum behind Bitcoin, and rightfully so. But I will have to say, Drew, you missed one person that was there. And for our cheesehead listeners, Aaron Rodgers is a Bitcoin guy. He was also on or at the Bitcoin conference and spoke on stage. So, it's across all stages of life. It's across all different industries, football players, tennis players, this, traditional finance, and now even the, just the mass adoption amongst just regular people buying and holding Bitcoin. And we'll get into it more in the episode, but actually using it as a payment processing or a way to actually pay and buy goods and services. So Drew, let's just dive right into, maybe a high level of like, what is Bitcoin? So traditionally people have thought of Bitcoin as a new unit of or a store of value similar to gold. But the way to really think about it is Bitcoin is software. It's code on the internet, on the new internet, the Web3. It's code that it's code that states that you own this unit of value, this unit of exchange, and it's very similar to like a gold, but more in a digital framework.
Yeah, it's funny bringing that up. It's one of the speakers there, if anybody's a Barstool fan, is Dave Portnoy. And I remember watching him go on a rant couple of years ago and just saying, I don't know what Bitcoin is. It's this imaginary thing. You can't hold it. You can't put it in your pocket. Could be a Ponzi scheme, but people are getting rich off it. So he's kind of getting into it. And as he's continued his journey, he's learned more and more about it. And it's really coming down to show that as you get into the weeds of Bitcoin, you can learn so much more. And even though you're not physically holding this piece of property, it can still be assigned to you. There's uh, confidence pushed behind it. And as you get further into it, realizing that there's not many other fingers dipping in the pot of it, that there's actually something there. You just have to become a little bit more educated on it.
So essentially, what it is, it's money, it's currency, and you might hear it being called hard money, which basically means it's very challenging to get and it's hard to manipulate. So Bitcoin specifically is deflationary. So that means that there is a finite amount of Bitcoin that will ever exist. That's 21 million. Right now, we're at about a little over 19 million in circulation, a little bit less if you account for the Bitcoin that has been lost or that has been quote unquote taken off the chain, specifically by Satoshi himself, who was the inventor of Bitcoin. Satoshi is an anonymous name. No one actually knows who this guy is, but it's deflationary. So contrast that to here in the United States, the system that we live in, it's inflationary, meaning that the US dollar, the, uh, the value of that dollar goes up over time. And that's because there is quote unquote a printing press that can basically just make up money out of thin air. And we have seen that here in the United States coming out of the pandemic with all of the money and the stimulus money that has been printed and infused into the economy. So that's inflationary, and we're really seeing a lot of the pain right now because of it.
And looking at the US dollar, gold, Bitcoin, whatever it may be, going back to the comments of Bitcoin's this imaginary thing and there's nothing backing it, really look at the US dollar, any fiat money that's out there. The only thing really backing these things now is confidence. And that's what's getting pushed into something like Bitcoin. The US dollar really is not backed by gold anymore. It's not really backed by anything else other than confidence. And most of your transactions, if you have an online bank, there's still these digital digits in your bank account that you're just transferring from one person to the other. So for me, it's not even that far fetched that Bitcoin can hold value or can be a hedge against inflation.
And if you even look back on currency in general, specifically here in the United States, the US dollar used to be backed by gold. The 1970s came around and they went off the gold standard, meaning that the US dollar was essentially backed by the military and the power of the United States. And so if you compare that and contrast that to Bitcoin, Bitcoin's not backed against like a thing like a physical asset like gold or silver. It's just backed by the power and the value that people see in Bitcoin. And so that a very high level idea of what Bitcoin is, it is that currency, it's that unit of value and that unit of exchange. But Drew, I think we're the besides the fact that it's deflationary, besides the fact that there's a finite amount of Bitcoin that can ever exist, one of the big aspects of Bitcoin is that it is a decentralized currency, decentralized and global currency.
Yeah, so this decentralization is probably one of my favorite pieces of Bitcoin. There's no really governing body over this that wants to uh, print money or they want to take money out of circulation. So I think that is such a cool characteristic, and then it can span over not only one government or governing bodies, but globally.
It can't be manipulated like we've seen here in the United States, where 40% of the US dollars have been printed over the course of the pandemic. That just can't happen in a Bitcoin world, or, just specifically in Bitcoin. And the decentralization is the main aspect of that. There's no governing body, there's no group of wealthy people that can really control this asset. It's really controlled by the masses, by the people, and it really provides freedom because of that. So for example, like in the United States, right, when you work, you get paid US dollars and you use that US dollars to buy goods and services, housing, food, etc. Well, because you are in an inflationary system, you are told to, or you're incentivized to spend it because in a year from now, in 5 months from now, whatever you're going to buy is going to be a little bit more expensive. So you're incentivized to spend, you're incentivized for to go into debt and things like that. Where in a Bitcoin world, because it's deflationary, because it's decentralized, it can't be manipulated by any government, by any entity, by a group of powerful people. It kind of flips it on its head. That rather than having to spend right away, you can now say, okay, well, if I save my Bitcoin, it's going to be cheaper in the future to actually purchase whatever it is. So it takes that nearsightedness of the US dollar, the inflationary system, and it allows you then to look more long term, which I think, Drew, is one of the biggest issues we have when it comes to saving and investing. People really struggle to look long term because of the pressures it takes just to survive on a day to day basis with your basic living expenses and all of that stuff.
And I think another interesting side of this, as I was listening to this conference, is being decentralized. There's no way for this type of technology property, currency that you want to call this, there's no way for it to discriminate from anybody. So if people were to having a hard time opening, say, like a checking account or a saving account, or don't have the ability to go there, and I'm talking, say you were in the middle of nowhere, you wouldn't be able to go to the bank constantly, or being, and some people aren't even able to open these accounts. So being a non-discriminatory, decentralized platform, I think, is so beneficial that it doesn't matter where or who you are, you can still work with this peer-to-peer type of payment or hold this type of value over a long period of time.
Drew, one of my favorite things about Bitcoin and the thesis behind Bitcoin is here in the United States, people, specifically in the political realm on both sides, talk about poverty and trying to get people out of poverty. But what you don't realize is that when you go through times like the pandemic, when a massive amount of money was influxed into the economy, that might have helped people on the poorer or the low middle class spectrum right away. But now those people are feeling the pain of inflation with their wages not rising as fast, right? And so what happens in the current economy or in an inflationary economy, you see that the poor get poorer and because of things get more expensive and their wages don't increase, where Bitcoin kind of solves that issue, right? Bitcoin says, like, you're going to get paid, but you're not going to feel the pressures of inflation because you don't have any body and manipulating the currency. And so that's just one example. One example that I really like about Bitcoin is the fact that, yeah, it's not going to solve poverty, don't get me wrong, but it's not going to be such a pain or such a huge factor like inflation or, the printing press, as you might want to call it, has, on our poorest of poor people.
Yeah, and it's such a relevant topic to bring up is with these inflationary times. The consumer price index, the CPI, came out today, I believe it was, and there, or this governing body that creates the CPI said the inflation rate was 8.5%. This, and that's kind of tracking what the inflation rate is. The crazy thing is too with the CPI is it might not be giving the whole picture of what inflation is. Going through this whole conference, it was crazy talking to these listening to these very, very smart people and their estimates of previous years when you're thinking 2.5 to 3.5% inflation. Their estimates were close to 10 to 14% inflation, which is crazy. And it's even more relevant when you're thinking of going through this pandemic when they put in so much money to stimulate the economy, and they make it seem like, hey, I'm going to help the less fortunate or the poor with these payments. But the crazy thing on top of that, I'm sorry I keep saying crazy, but I mean it keeps blowing my mind when you think about this, is the more money that got put into circulation, the more inflation happened. And even though that might have helped in the short term for them to pay their bill, the rich were out there trying to buy assets like property or any type of, maybe like a business or whatever it may be. And the value kept going up for them. So their value kept appreciating. And it's not necessarily that the value appreciated, it's the value depreciated for everybody else's dollar. So it just cost more to buy something. And it just blows my mind that even though you wanted to help the less fortunate, it ends up helping the people that were in a better financial position because it makes their assets seem more valuable or expensive when it's actually the value of the dollar that's gone less.
The value of the dollar erodes, assets get inflated, and all of that is just a huge issue, right? When it comes down to helping those people that probably need the most help. And I'd like to think that those type of stimulus payments are in the best interests of the people that needed the most help. But who knows? That we're not the politicians making the decision. We're just here to talk about Bitcoin. But so out of the conference, Kathy Woods, who is the CEO and CIO of ARK Investments, she made a bold prediction that by 2030, Bitcoin is going to reach $1 million per coin. And Drew, I don't think it's actually that I think that's actually pretty feasible if you think about it. All of the things that need to go into getting Bitcoin there, we'll talk about here in a little bit. But if you just look at where it's come in the last 10 years, we're talking that, just a couple of years ago it was worth $5,000. And now we're up, I think we're hovering around 40. So it's not too far off to think that Bitcoin could and most likely will reach $1 million by 2030. And there's really three main aspects of Bitcoin, or what has to happen for Bitcoin to get there or above. And the first one is the political realm. I think it's no surprise to anyone that regulation is going to happen, and I don't think regulation is necessarily a bad thing. But right now, there's no regulation around Bitcoin. There's no regulation around cryptocurrencies, and all that's going to come. And with regulation comes a lot more confidence in where the real money is, and that's in the capital markets.
That's a great point to bring up. The capital markets are going to be a huge push forward for this. The regulation that's going to be coming in the future, that's going to draw this blueprint, is going to be a huge driving factor for that. And the reason is so many people, even though you hear these big names that are investing into it, the large amount of money getting put in is for the most part retail type of investors like you and me, or let's just say non-institutions. And the moment that there becomes some type of an ETF, or they get the green light because it can really predict the future of the regulatory body and it can be much more predictive, is when there's going to be so much money being put into this. It's going to be unbelievable. It'll be trillions of dollars that are going to be put into something like a Bitcoin.
I think right now gold has a market cap of like 12 trillion, and then if you think about equities, it's like 110, 115 trillion. So just by those two numbers alone, you can assume that Bitcoin's going to be in between there, whether it's going to be closer to gold or it's going to be closer to equities. Who's to really say, right? But, it all starts with regulation, because these companies, they are already regulated. They have certain things that they have to abide by. And unfortunately, some companies just can't invest into Bitcoin because it's not regulated, because they don't have the green light, so to say, from the government. And I think once you start seeing regulation come out, and it's already coming into the political realm, right? You already have political candidates that are becoming pro Bitcoiners on the both the left and the right. And as you start to see more adoption by the politicians, which then will lead to drafting of regulation, then you're going to start seeing a lot of this moving, or the value of the asset of Bitcoin start to move a lot faster. 'Cause it's going to allow that infusion of capital from the big time players, the hedge funds, the insurance companies, all of those people that own all the capital. You're going to start seeing a lot of that flow into Bitcoin, and it's going to be a really good thing for the asset.
And as it gets more adoption from institutions, I mean, right now it's extremely early. as institutions get into it, they're going to be considered early. And then what comes after that is going to be people that had no idea what Bitcoin was, or they thought it was just a fad and it was going to go away. And then that's going to be even more money getting put into this. I, I don't even know exactly the number for what Bitcoin is, but I think I heard something only was like 3% of people are invested in cryptocurrency in the US, I want to say, or that might be globally. Somebody can fact check me on that. But it's some astronomically small number. And the fact that more people aren't in that yet, you can just see how early this asset is for people. And the prospect of something like Bitcoin going to $1 million when just within the last year it was close to $70,000 with not many people invested into it is becoming less and less far fetched to be actually making the $1 million mark for Bitcoin.
With mass adoption comes the technology side, right? So that's going to be another key piece here in the next 8 years is the technology, the innovation that needs to come to help people to help people adopt Bitcoin, not only as a stored value, as an investment, but also as a unit of exchange, a currency. So between the political realm, getting regulation, good regulation. Let's be clear that it could be regulated poorly, and that would be unfortunate. But I just don't think that's going to be the case. One, because Bitcoin's so big, and two, you have very vocal political or politicians that have a lot of influence becoming more and more pro Bitcoin. Uh, then you have the capital markets. It's going to follow the regulation, be number two to getting Bitcoin to 1 million. And then the third is going to be that technology piece that's going to help onboard the masses to Bitcoin and really just the blockchain in general. There's probably it's not going to just be Bitcoin. More than likely, you're probably going to see Bitcoin, maybe some stable coins, which just basically mimics whatever currency. So the US dollar, for example, some sort of mixture between that. There's Ethereum and there's a ton of other coins out there, but then you're going to see it, with that technology, people are going to be able to use whether it's Bitcoin or some other type of digital asset, digital currency, and all of that. Putting that aside and just focusing on Bitcoin. Between those three areas, I think that's really going to drive up the price of Bitcoin. It's going to be a really good thing for people that are invested in it, but also just a really good thing for humanity in general.
As far as technology goes and mass adoption, one of the biggest things me and you were talking about just before the podcast is Jack Mallers, I think is how you pronounce it, the CEO of Strike. It's pretty much payment type of company or technology. And they partnered with NCR, I believe the company is the largest payment processor in the world,
Yeah, I
I think
think
it is.
if I remember right, they have 1 in 6 payment processors in stores. So massive.
So it's huge. So with that mass adoption, now it's becoming more mainstream with a decision that was made there where you could be going to your grocery store and be paying with this Bitcoin, and you don't have to worry about maybe a US dollar, or you could be in another country and be paying with that same payment processor with your Bitcoin. So the adoption of it is already creeping in to some of the biggest companies that you are at every single day.
That segues us nicely then into like really the last segment of this episode, or at least of our main segment, and that's Bitcoin as a payment system. So traditionally, people think of Bitcoin as a store of value, as an asset, something that's going to appreciate over time. But I think it's really overlooked of using Bitcoin and the Bitcoin network as a payment system. So just a little bit of background around payment systems in general, right? Yeah, you can kind of think of like, how do we pay now, right? It's using a credit card, whether it's Visa, MasterCard, Discover. That's how a majority of people pay. Yes, I know there's still people that pay with cash. I know that, but majority of people pay with cards. And so, Drew, that technology actually was invented in the 1940s. And ever since then, there has been no innovation in payment processing and payment systems. And that's super unfortunate. And the reason why is because in this old school almost archaic now when you think about what's available today. But in this old traditional payment system, when you when say you would go to someone selling a shirt and you wanted to buy that shirt, and you use a credit card, well, there's actually more than just you and the seller. There's going to actually be five parties involved in this traditional system. So there's you, there's a seller, there's your bank, there's a seller's bank, and then there's the payment system, which is the credit card, the Visa, the MasterCard, etc. And because of that framework, it costs a lot of money that unfortunately falls on the seller. So on average, it's about 3% of every transaction the seller has to pay. And so you can think, Drew, that 3% of every transaction, specifically for those small businesses that already have slim or razor thin margins, that 3% is really cutting into their profits, which is, not allowing them to grow their business. And it could cause more stress in times of downturns like pandemics, right, and all that. And so that's the traditional payment system: is five parties are involved. It costs about 3% of every transaction. It's slow. It takes about 2 to 15 days to actually settle the transaction. And so you can see this is really a huge issue for a lot of different reasons.
There's so much to unpack on the payment side. It's crazy. There I go saying crazy again.
I've
But
got the counter. I think we're at seven.
listening to this conference, one of the people that came out was a co-founder of PayPal, and if anybody under or remembers, Elon Musk was actually one of the co-founders as well with PayPal, but it wasn't Elon Musk, it was one of the other co-founders. But he was saying that in the traditional system right now, almost any payment that you're doing electronically is just a loan or a credit. It's just an obligation of payment. So as it's going through, this doesn't really affect if it doesn't overbalance, if it overdrafts on your account, or it pulls too much, or it gets frozen in between the payments. And with the Bitcoin or these types of cryptocurrencies or anything on the blockchain, I should say, it's just directly peer to peer, and it's authenticated on that piece of software. So when you're giving $100 from me to Cavan, you can actually see that transaction publicly happen, and it happens now within probably, well, I think it used to be like 8 to 12 minutes, and now it's becoming instantaneous. And before, that transaction in the traditional system could be frozen halfway through. And I don't, not mean to get political here or anything, but I'm just using an example of when you looked at the Canadian truckers or people that wanted to donate to them, and the government was actually telling the banks to freeze these accounts so people couldn't get that money in and out of there. Where something peer to peer, you don't have to have that intermediary, and it can be sent instantaneous, it can be authenticated, and you're ready to go.
It's true freedom money at the end of the day. It can't, it's global, it's fast, it's secure, and there's no one controlling it. Which is absolutely fantastic, because that helps the general public. It doesn't. It's not benefiting a group of a body or an entity or a group of people. It's really allowing the masses to use their money the way that they want, but specifically in Bitcoin. So if you think about like the traditional payment system, like we were just talking about, Bitcoin now kind of just removes all of that. And so what Bitcoin does, so Bitcoin is a network similar to like the blockchain, and so that's kind of like your layer one. If you hear that as your base layer, that's the ledger where all the transactions are recorded on. So every time you make a transaction is recorded on the Bitcoin network. Now that was pretty slow, like you were saying, Drew, about 8 to 12 minutes, somewhere in there. I forget exactly how fast it takes to actually record on the Bitcoin network. But now they've built a layer two on top of that, and they call that the Lightning Network. And basically, what that does is it takes away the slowness of recording transactions on the Bitcoin network, and it makes transaction amongst peers. So if, again, back to my shirt, if I was going to go and buy that shirt, it makes those transactions almost instantaneous, basically at the speed of light. And so it really, one, it allows you to have those transactions instantly. It avoids having someone not have the funds to pay it, because you have to have the funds, because you're basically right there buying whatever goods or service you are looking for. But then the best part, Drew, is that it eliminates the costs of using a credit card, that traditional payment system. So rather than the merchant having to pay that 3%, they get that 3% back. And I think that's just absolutely a wonderful aspect of Bitcoin, and then the Lightning Network on top of it.
When you have something that can be used as payment that quick, and it can be that old adage of you're keeping it underneath your mattress, but still hold and gain value, is such an awesome and I'm not gonna say it. I want to say
We're at
crazy.
7.5.
It's just such an awesome piece of software that and technology that going forward is going to transform the way people go about their entire life. It's, you know, if you wanted to be paying somebody across the country, it could be sent to them in a matter of seconds and they don't need a bank for it.
What's really cool, Drew, is the fact that you can so say like you pay in yen. I am the merchant that takes only US dollars, or I sell, my goods and service here in the United States. Well, you can actually, through what Strike's doing, uh and their partnerships with all the different companies, is actually you can pay in yen through Cash App, for example. You can use yen, it can get converted instantly to Bitcoin, transacted over the Lightning, which is a layer two of the Bitcoin network, and then instantaneously transfer from Bitcoin to US dollars and pay me without any of the fees uh, involved. So not only is it cheaper to go on transactions, not only is it quicker, but it's global. It allows you to use any sort of currency, whether you want to use US dollars, you want to pay in Bitcoin, or if you want to pay in any other type of currency. You have that ability now. And the best part, Drew, is that it actually, as we speak today, is possible to do this in stores like CVS and many more to come in the future.
Yeah, so if it's people that are wanting to travel worldwide or go on their little crazy vacation to Cancun or something, these payments you don't have to be worrying about doing the transferring your US dollar over to another type of fiat currency, which is pretty amazing to me because I know I've tried to do that a couple times and it's either I had to do it in the US and then I had to put through a request and it took a couple days to actually get that other currency into our location, plus there's fees on top of it. And if I didn't do it at home and I forgot, I had to do it in the airport, which was even more expensive with fees, and plus all the time that goes into it. When you could just have your cell phone on you, you could go somewhere, pay, and pay less fees and a lot less time,
Yeah,
a lot less
and be
headache.
done with it. So, Drew, super exciting coming out of last week with the Bitcoin conference. One thing I was going to bring up earlier, and like we kind of got going on our conversation, is one of the things I liked most coming out of that conference was, the Wall Street Bull that's out there, out in Wall Street. Well, they actually in Miami made a Bitcoin bull, because they are saying that Bitcoin, that's going to be like the capital of Bitcoin in Miami. And I don't know if you had a chance to actually look at that bull, but that thing was pretty awesome. And I think it could kick the Wall Street Bulls any day.
I did. I saw it. It looked really awesome. It was looked kind of all mechanical. Is black. Had some little, well, almost looked like Bitcoin signs for like joints. But as I was looking through the comments, I think I have to bring this up. Of course, somebody notices it,
I think I
and
know where you're going. Yeah. I think I know where you're going with this one.
The Wall Street Bull has balls, and the Miami Bitcoin Bull does not have balls.
We talked about Bitcoin as an asset and what it's going to take to get the price up to 1 million. We talked about the really cool, innovative technologies that are coming out that's going to allow you to transact on the Bitcoin network, how it's going to basically eliminate fees, how it's going to be such a major gain for merchants, for just people in general. And there's just so much that has come out of last week, a lot that we've touched here today. But what would you say is, out of all of this stuff, is if you had one main takeaway for our listener here, what would it be?
Well, I don't know if I can actually just do one main takeaway here. Something this might be a little bit longer format for this section of our podcast for key takeaway, but I want to bring it up because I think it's really cool and it kind of opens your eyes more. And maybe I should have said it earlier in the podcast, but anyways, here it goes. During the Bitcoin conference, there was a guy that came out. His name's Michael Saylor, and he just talked about and compared things as gold, cash, physical property, and Bitcoin. And going through, you kind of come to the conclusion that Bitcoin can be almost the best of all those worlds. And as you're going through this, for one, let's look at gold. And yes, it's physical. Yes, you can have it, touch it, feel it. But if you ever wanted to move that or transfer it, if you have a lot of gold, it can be extremely heavy and it might be extremely difficult to move somewhere. Plus, you have to worry about if somebody wanted to try stealing it from you, or if you wanted to put it in a safe, you have to be able to get there. And so, seeing some downsides of gold, of let's just say just the transferring of it, I think is one side of it. Another part of gold is, as we talked, Bitcoin can be deflationary and have a limit of Bitcoin's 21 million. The gold is constantly getting pushed into the market. You constantly have miners mining gold. And one of the things he brought up is if you really thought gold had as much value as you're talking about, no miner would sell their gold. And that's the only thing that miners do is they mine it and they sell it for fiat type of money. So that was one interesting side when you're looking at gold. When you're looking at cash, if you were to hold it under your mattress or keep it at your house, you can worry about potentially it burning, or if you wanted to transfer from where you're at to another country and you had to fly it there, you have to find some way to hide it without it getting seized or constantly question about why you actually have it. On top of that, you have money getting pushed printed constantly, and you have inflation, so you're constantly losing close to 10% of the value of your dollar every year, which was interesting when he correlated it with the S&P 500, which they say gains roughly over the long term close to 10% a year, and something we've talked about. So the value of your dollar in the US, which you can be fairly confident behind, but if you were in another country, one of the speakers was from North Korea, they had a money swap. So if you were some billionaire and you didn't transfer your money within a week to this new dollar, you were poor. And they can just dictate what your currency does that easy because there's some type of governing body over it. Another interesting part of it. And then they went on to physical property, and you see a lot of people putting money into property because it can be very long term, but it's also an asset that as it appreciates, you still have to worry about locality of property taxes, maintenance, keeping up on it. And if you wanted to then transfer that generationally, you have to worry about those factors of what that city does, if it continues to grow, if it shrinks, if it disappears. And if you wanted then to take that and move it somewhere, you can't just pick up a building and move it across the country, which is something very interesting too. And then it gets to Bitcoin, and you can find out that it has a limited supply of the 21 million. If you wanted to transfer it anywhere for generational purposes, you can transfer it with pretty much a click of a key. You can, if you wanted to cross countries with it, and you had somebody that for some reason wanted to hurt you about it, like hurt you or try to seize this, the only thing that you have to carry with you is your memory, because you have a key phrase that is your actual Bitcoin, which is very interesting. And just the actual peer to peer of it is one side of it. And then lastly, being decentralized, not having a governing body over it, you can have a couple bad actors in Bitcoin, but there's so much of a community behind it, and it's community driven, being publicly ledgered and decentralized, that those community members that are bad will get flushed out from this, what this Michael Saylor called a bunch of imperfect parts making a perfect invention or product. And so going through these whole series of gold, cash, physical property, Bitcoin, you can kind of see that there is an upside, and you can look at the upsides and downsides of all of these other type of assets. And if there was somebody that says, what if the grid goes out? It would have to be globally. Every single electrical grid in the entire world would have to go out. And the only thing that happens is it just goes dormant until you get any type of power again, whether that's 100, 1,000 years down the road, and it's going to be back up and running. So that's my rant for the key
No, I think
takeaways.
I liked it though. I mean, if I was to sum it all up, and this is kind of what I was going to go with my key takeaway, is that it's freedom money. I know I've said that a couple times, but it truly is providing the power and the ownership back to people, and it really takes it away from any centralizing body, whether that's a government or a group of powerful people, whether lobbyists or companies or whatever it might be. But it's truly a powerful asset. It's, as we've kind of talked about in this episode, it is a form of payment. You can actually use it to buy goods and services. It's frictionless, which basically means that it costs less money to actually transact with Bitcoin. And there's just so many benefits. Drew, we could have a full episode just on how Bitcoin fixes everything basically in the world. I talked a little bit earlier about poverty and how it doesn't actually hurt people in poverty like inflation does. And there's so many more examples out there that Bitcoin can solve those issues. And so, Drew, I just think, coming out of the conference last week, just Bitcoin in general, I'm very hopeful about it in the future. I think it's, a magnificent invention. The story behind Bitcoin and how no one actually knows who invents it's fascinating. So many things that we could go into, and maybe we will go into an episode in the future around the origins of Bitcoin, because it is truly fascinating how it came to be. But just generally speaking, lot there's a lot to look up for in Bitcoin and in the future here. The fact that you're going to be able to transact on it in big time stores like Best Buy and other really, really big real retailers, that's huge. And I think as the political landscape and the regulation comes to be, capital markets move in, you're gonna just start seeing Bitcoin really be a really good investment. Not financial advice, but I just truly believe that in the long term, specifically in the next 10 to 20 years.
I'm just extremely, extremely excited for where this takes us. I have never felt like you're at the beginning stages of something extremely big. And I've just kind of started looking into this. I think the first time I bought Bitcoin was probably like 3 or 4 years ago, but it was just I saw people put money into it. So then I just did and didn't really think much of it. And they kind of was just dormant for a couple of years. And as this last year, I've been trying to look more and more into any type of crypto or Bitcoin. And my journey has just started. And I'm so excited to keep learning about this technology, because every day there's a term that comes up and I'm still have a hard time wrapping my head around it, and my little light bulb hasn't popped off yet. And having these conversations, even with you, Cavan, you even help me understand some of these terms even better than I've seen on YouTube, just because I kind of have my head wrapped around it. But being able to bounce it back and forth, it really helps me understand just like one term of the day. And then I just try to continue to learn. But all in all, I'm just extremely excited to keep learning and educate myself and continue on this journey and seeing where it takes this world in the upcoming years.
All right, Drew. So, talking about Bitcoin today, looking at the conference, maybe for this week and what's going on in the neighborhood, let's just talk about how we actually go out and buy Bitcoin, what services we're using, because I'm sure there's going to be a listener too that's, listening to this podcast saying like, okay, how do I even go about buying Bitcoin? You guys have interest, piqued my interest. I've done a little more research of my own, and I want to go out and actually buy Bitcoin. I want to own Bitcoin. I want to be part of this revolution. I want to be part of this new phase of the financial industry. So let's talk about how we specifically do it in our personal lives. So how would you start first? How do you go out and buy Bitcoin?
So the way I do it, and the first time I've ever done it was I just Googled where I could buy it. And at the time, that was Coinbase was one of the biggest ones, and it is one of the biggest exchanges to do it. And I would say for the ease of buying some mainstream cryptocurrencies or a Bitcoin, Coinbase was extremely user friendly, but you can really find how much information has to go into this. I had to use like a driver's license. You have to fund it from your bank account. You have to give out all this type of information. You have to give out pretty much your social security number. So it can be a bit intimidating, but that's just trying to show how secure these companies or exchanges are. There's also another way I've done it, and that was through a crypto wallet, and it's called Trust Wallet. And when we're talking on centralized, decentralized ways, that Coinbase I did was more of a centralized exchange. So you don't technically own your Bitcoin or your crypto because you don't have your private keys for it. On the Trust Wallet I have, all it is showing a window to, or like a browser. So you can think of it as using Firefox or Google Chrome or Safari. That's what you can look at these wallets for. And then as you go inside your wallet is where you'd be able to see my crypto that I have. And then those transact through decentralized exchanges called swaps. So that's where the second place I got my crypto from. And depending on the blockchain you're on, this might sound like a lot, I'm sorry, but depending on the blockchain you're on, whether it's Ethereum or Solana or Binance, they each have pretty much their main swap mechanisms. So for a Binance like coin, or what they would call a token, is just some of these offshoots that are built on top of that blockchain. If it's a Binance one, you go on to something called Pancake Swap is a big one. If you were looking at Ethereum token, you can go on to, or like an Ethereum coin, you can go on to something called like a Uniswap. There's also a swap called Sushi Swap. There's Trader Joe Swap. There's Everswap, Safe Moon Swap. So there's all these different swaps, and those tend to be the decentralized. So your wallet will connect with that swap. You transact, and then you put that contract into your wallet so you can have that window. So that's a little bit more work, and it sounds like a lot, but once you do it once or twice, it's kind of second nature, I would say. The hardest point with having it on decentralized wallet or decentralized way of buying it is your on and off ramps tend to be more difficult. And by on and off ramps, I'm talking with bringing money on and then taking or withdrawing your money out. So there's a little bit more work into doing that. Uh, so if you wanted to dip your feet into it, Coinbase I thought was extremely simple and easy. If you want to kind of be more decentralized and get more into the thick of it, you can try something like a Trust Wallet or a MetaMask. Those are two of the big names for a, let's say, like your browser wallet. Kind of like I was saying, if it's either, it's a difference between Google Chrome and Safari. And actually, just today, or over this Bitcoin conference, Robinhood, so a lot of people that are wanted to dip their feet into the stock market, they actually are doing crypto as well. And I know that Robinhood, I haven't dealt with that Robinhood app, but watching videos and people talk about it, it tends to be one of the more user friendly types of ways to buy it too. And they are constantly adding more cryptos to it. So you're going to have your Bitcoin, your Ethereums, your Dogecoin. They today did put Sheeb, Solana, Polygon, Compound, I think. So there's a bunch of different ones out there. So that's kind of where I buy them from, and just giving some ideas of where else to buy them from. So it's just a matter of how new you are to it. If you get very intimidated, just go on to Robinhood. I think that would probably be the easiest, or Coinbase.
I think those Coinbase, Robinhood, I've used BlockFi before. Those types of companies make it really easy to own or to buy Bitcoin, to invest in Bitcoin, or any other type of cryptocurrency. One The company that I use now is a crypto exchange. It's FTX US, and it's very similar to the Coinbase and to BlockFi, where it's a know your customer type exchange. Basically, meaning, like you were saying, Drew, you have to put in your personal information to actually have an account with them. But what I like about FTX US is that you're able to actually send your crypto wherever you want, unlike BlockFi. And well, I suppose with BlockFi and Coinbase you can as well, but there's fees associated with that. But with FTX US, you can actually get both the benefit of a centralized exchange, but then also the decentralization and the anonymity of. I can never say that word. I don't even know why I try, but being able to put your Bitcoin or whatever type of crypto you have, you can put it into a wallet, or you can put it into cold storage, which basically is very similar to like a flash drive where you just put your Bitcoin on there and it's not accessible via the internet, so it can't be stolen. So that's specifically what I use. I don't actually buy on BlockFi anymore. I was buying on BlockFi because it you could put it into their BlockFi interest account, which basically just gave you interest on your Bitcoin. Or whatever other type of crypto you had in there. Unfortunately, you can no longer add more money into your BlackFi interest account, or you can't add any more crypto into there because of regulatory issues that they're going through. And so now I'm buying all of my stuff on FTX US. It's really simple. It's a little intimidating if you've never seen like a stock trading type exchange before, but there's plenty of good resources out there to get on FTX US. It's really not too difficult. But if you're a brand new beginner, yeah, I think Coinbase, Robinhood, those types of apps or companies are probably the best way to go. And then as you get more comfortable with investing, more comfortable with buying crypto, or specifically Bitcoin, then you can move on to, whether it's an exchange like FTX US, or even going decentralized, like you were saying, Drew, and really having the full benefit of buying Bitcoin. And all of that comes with the decentralization of it.
Yep. And, with these decentralized apps too, and whether you put it into cold storage, I think there's one that's called Ledger, is the name of it. It's kind of interesting, and just putting this out there in case you ever were to get one of these Trust Wallet or MetaMask. Like I said, it's just a window into your part of the blockchain. So just recently, the Apple App Store took off Trust Wallet. So some people are freaking out thinking, "Oh, I can't get Trust Wallet on my iPhone. I lost all of my money and it's just gone." And I just want to let you guys know, like, don't worry about that, because even though they might not have the app, your money is still secured on the blockchain. So you could go on to any other wallet that's accepted or that you wanted to make or that's on the computer, and you can just type in your seed phrase that's in memory or written out on a piece of paper hidden around your house or business or security box, wherever it may be. And once you plug that in, it brings up your wallet and it brings up your funds.
That was a ton on crypto. Super exciting episode. So, the listener, if you guys really like this type of episode, let us know, because Drew and I obviously are pretty passionate when it comes to crypto, and me specifically. But Drew, I think you would agree, like, very bullish on Bitcoin, and we love talking about it. So if these types of episodes interest you, let us know either in the comments in YouTube, hit us up over on Instagram in our DMs, or just reach out to us and let us know that these types of episodes are awesome and you want to hear more about them.
And if you wanted to try one of those decentralized type of apps, like Cavan said, DM us, reach out to us. We can help you get through that. And if we have enough ask for it, maybe it's something that you guys want us to walk through and we can do some type of screen recording and do an actual transaction and talk through it. And that might even help as well. So just let us know what you would want to see or hear and let us know in the comments
Couldn't agree more,
or
Drew. All right,
DMs.
man. Hit us up in the DMs for sure. All right, man. Take us out of here.
An informational packed episode today. I know I used the word crazy more times than I should have. Cavan thought maybe 7.5. We might have to go back and actually do the actual counting for it. But it's really that wild to me for this technology and how early on it is and just the possibilities that are into the future. If this was something that you really did like to hear, please let us know. If it's still something that you're still extremely confused about, don't worry. I'm very confused at a lot of parts of this as well. We just hope this gets you started on some more education. If there's any information that you feel like you'd like to ask us, please don't be afraid to DM us, put something in the comments. But all in all, very fun episode for Cavan and myself. We hope you enjoyed it, and we hope to see you guys next week in the neighborhood.